Hello, I'm Glenn Chu, a broker associate at Century 21 Select Real Estate in Madera, California. I serve communities in both Madera and Fresno counties located in the heart of California's central San Joaquin Valley. Each week I post a Chu On This video blog that is focused on a single real estate topic. These weekly real estate video blogs will help you keep up with what is going on in this fast-changing world of real estate. I hope you find them interesting and valuable. Today I'm going to talk about what I think is going to take place with future home prices and mortgage rates and how they will both affect home affordability going forward. All right then, let's get right into it and start with the 49-year average monthly price movement. This is a non-seasonally adjusted so that these numbers will differ a bit from the seasonally adjusted index. This shows the average of the last 49 years. What happens every month to home prices? What we see early in the year is appreciation starts to accelerate going into the buying season. Then once the buying season is over, they start to decelerate. By the end of the year, when there's a lot less demand, prices start to decelerate to a point that price movement comes really close to that zero line. And that is the last 49 years. Where do we stand right now compared to that? Well, if we look at month-over-month prices on the non-seasonally adjusted repeat sales index, what we see is the 49-year average, which are the black bars, and what actually happened in 2023, which are the green bars. We started out the year slow. We didn't match normal appreciation for those first couple of months, but then it took off and got a little too strong. But in July and August, we returned to normal appreciation. This index does not show the most recent sales data because it takes a while to do adjustments, so they are comparing like houses. All right, so what we can see again is that we're going back to normal levels of appreciation, and again, I think that's a good thing because that impacts affordability. I think we can all acknowledge that affordability as we know it is in crisis mode. There are a whole bunch of young people, a whole bunch of old people, and a whole bunch of families that have the American dream of home ownership, but they can't attain it right now. I mean, look at monthly mortgage payments. Look how much they've increased since January 2021, even how much they've increased since January 2022, and even how much they've increased since January of this year. We can see that there is a major challenge here. In addition to higher home prices, interest rates are nowhere near where they have been for the last several years. From 2016 all the way to 2022, mortgage rates stayed under 5%. Then in 2022, they shot up, and now they're going even higher than that. Now, we did get a slight reprieve this last weekend, where mortgage rates actually dropped significantly from the month before to a December 4th low of 7.06%. There hasn't been a lot of press on it. There weren't a lot of people taking advantage of it, but maybe that's because they're nervous about making that buying decision. But the important thing is interest rates are heading in the right direction. Comparing 2016 through 2022, you can see the orange bars below and the blue threshold line up above. We are well above anything a lot of millennials and Gen Xers have been seeing since the late 2000s. If we take a look at it all from a decade's perspective, we can also see that we can go all the way back to the 1990s to see mortgage rates as high as they were today. So what we have is a situation where mortgage rates is really impacting affordability in a very, very, very big way. Now, the interesting thing is when people say, well, no one's going to buy a house. Understand, what you sell or buy is a major piece of the American dream. As a matter of fact, even through all this flux, a survey from the Housing Trends Report for the National Association of Home Builders shows that 17% of respondents are still planning to buy a home in the next 12 months, even at these high interest rates. So what can we take away from this? Two things. Number one, home prices will continue to increase, however, at a much normal appreciation rate. And number two, Affordability will be a huge issue for Gen Xers and millennials, which will require a change in how future buyers view their dream home. Perhaps a smaller square footage home or a multi-generational home needs to be part of that conversation. But that's a topic for another day. And so that's it for this week's Chew on This. If you have any questions about what's going in our local Fresno Madera area, please contact me and let's chat. Thanks for listening. See you next week.